Hello, welcome to Todd Miller TV. Saw an article today on Housing Wire that I wanted to share with you. Reading it here on my iPad. It says, investors buying with cash pressure home prices. And one of the things they're talking about in this article is how people paying with cash are almost half of all home purchases. So what's happening, especially in the lower ranges, so what's happening is, the analogy that they're making here, what they're trying to say is that when more people buy with cash, that pushes home prices less, or pushes them down. And one of the things that the statistical reason that they believe this, because they don't have any statistics, is because they surveyed real estate agents and asked them on cash investors, what do they normally offer as a comparison of listing price. So rather than find out what actual homes sold for, they asked what people offered, and instead of getting statistical data, they just asked agents, like, giving a range, and so agents were just throwing 10 to 20% out there, which is probably pretty accurate. The average investor, who's a cash purchaser, offers 10 to 20% below the list price. That's an offer. So if it's listed for 50 grand, they're offering between 40 and 45. Now, that doesn't mean that's what they end up paying for it, because if you get 10 offers, eventually they'll all bid it back up to 50,000 or more. So the sort of thought that just because people are buying cash, that pushes home prices lower, is not really the case. Because you're paying cash, typically, you're not asking for closing costs. The seller is able to give you a little less. So I'll give you an example. Let's look at a $100,000 house. This being financed. And you're going to buy it as it's worth $100,000. You're going to buy it as getting a loan. So you offer $103,000 because you need $3,000 in closing costs, because you're going to have closing costs for your loan. So the seller says, okay, I can sell it for $103,000 and then have to pay $3,000 for his closing costs, so the seller nets $100,000. Or someone comes in with cash for $100 grand. So the average person look at that and says, well, cash person's getting it cheaper. Well, not really. The cash person's getting it for the same price. They're just netting out those closing costs. So the seller nets the same amount. So there's a little bit of a myth. I mean, yes, if you have a shorter time frame to close and you're more of a certain of a buyer, I mean, you have cash in the bank, you don't have to worry for a loan qual, you tend to get more attention. But this thought that people paying cash are getting it 10 to 20% less is false, and that this is sort of breeding people with cash to lowball everything and not get anything. We've seen this over and over. If you really want to smoke a deal, go to the trustee sale. Buy down at the courthouse steps, basically, sight unseen, not knowing what's inside the house. You will get a better deal. You just will, because you're taking risks. You don't know what's inside the house. It could be trash. It could be mold infested. Okay, so people buying cash are not pushing down home prices. Actually, the opposite. People buying cash are solidifying the market, because there's just less homes that can be foreclosed in the future, because cash people can't get foreclosed on, really. So anyway, I thought that was interesting. Their analogy was really weird. Plus, they were trying to take this national thing and make a story out of it, which didn't make a lot of sense to me. So anyway, I thought I would share that with you. Like anything, especially real estate, it's local. So when you see these national things, don't try to analyze that too much and pretend to be an expert in a certain marketplace. Just go to somebody in the market who's a professional, who gets it, who knows the details of the market, and they'll be able to guide you with the best information. So just be careful when you're reading these things online. Anyway, so that's my update for today, and hope to see you on another video. Thanks.